I will be revealing an absolute game changer in this video. Whether you are a beginner trader or one with experience, this will help you take your trading skills to the next level. So I encourage you to watch the video from beginning to end. Let's get started. First, you will need to understand what a divergence looks like and why it is so important. Let's take a look at this chart. From here to here, the price is moving downwards. But if you look at the corresponding points on the RSI indicator, from here to here, it is moving upwards. This is a divergence. Simply put, it's when the movement of the price and the RSI are not moving in the same direction. There are many kinds of divergences, but in this case, since the RSI is moving up while the price is moving down, this is a bullish divergence. Now, a bullish divergence like this is telling us that the current downward move here is weakening. So it would not be surprising if the price transitioned into an upward move soon. Let's skip forward. You can see that is exactly what happened. Divergences are cool, but keep in mind that you never want to use a single indicator in isolation. For higher quality trades, you need to build on it further. So let's do that. Here is another chart. The first thing I want you to notice is that we have a descending trend line. Price touched this trend line here, 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 and here. This tells us that this trend line is being respected. The idea here is that once the price manages to close above this trend line, it will start to transition into an upward pattern. Let's combine that with what we know about divergences. From here to here, the price is going down, but the corresponding points on the RSI are going up. So we have identified a bullish divergence. Let's skip forward a little. We have not just one, but two green candles closing above the trend line. These are good entries because we combined the fact that there is a bullish divergence with a break of the descending trend line. You could put a stop loss somewhere below these candles. Personally, I like to wait for a red candle to close quite a bit below my entry candle, but the reasoning behind that will be for another video. Let's skip forward to the result of this trade. You can see that this trade was a success. Pretty cool, right? But we are not done. Let's build on this even further. On this chart, we are starting with the weekly time frame. This is because we want to identify a key level. If you look to the left, you can see that the price went up until it hit this point, and then it had a huge sell-off. So that makes this an important key level to mark on the weekly because the price had a strong reaction to it. Now, if you look where the price is currently, it's sitting right on top of this key level. The idea here is that since the price is on top of it, we may experience buying pressure that will cause the price to bounce upwards from this level. Now let's zoom into the 2-hour time frame. We have a descending trend line that has been touched here, here, and here. That's a sign that the trend line is being respected. We also have a bullish divergence. You can see the price is going down overall. And at the corresponding points, the RSI is going up. Now, we will wait for this trend line to be broken. Skipping forward, we have our entry. It's a nice green candle. I think a reasonable stop loss could go right here. Let's skip to the result. You can see that this was a success. Let me make it clear what we did. We combined the fact that there was a support, a bullish divergence, and a descending trendline break. That was 3 factors in our favor, telling us that it was a good time to buy. And guess what? We're not even done building the strategy. On to the next chart. Okay, so the next thing we are going to add to our strategy is moving averages. They can be quite useful. Now, you don't want to just use any moving average. You need to use the moving average that price has been getting rejected by, or a moving average that price has not touched in a while. If you look right here, you can see that price struggled to break above the 10 exponential moving average. almost like it's acting as a resistance. Also notice that we have a bullish divergence. Because the moving average recently acted as a resistance, we could use a close above that moving average as our entry. So this right here is our entry. Your stop loss could go below here. Now let's see the result of this trade. It was a success. Now let's latch this onto the overall strategy that we are building. On to the next chart. The first thing we are going to do is identify a key level on the weekly time frame. If you look to the left, you can see that price shot upwards from here until it formed this peak. After that, it started consolidating a bit. So we should draw a line at this peak here since this acted as a significant ceiling for price. Now, look where the price is currently. It's right at this level. And since it's above it, there is a good chance the level will act as a support. Now let's zoom into the daily time frame to try to spot an entry. I want to let you know that we don't always have to use a descending trend line because there's not always an obvious line to draw that price is respecting. We could simply draw the most current ceiling on price by following along with the price structure. Here's what I mean. Turn your attention to this point. Price went down, up, down, up, down, and up one more time. The most recent peak was right here, so I will draw a horizontal line here. Simple, right? Also, notice how the price bounced away from the 30 exponential moving average here. And of course, we have a bullish divergence. This one is really good. The more the divergence sticks out, the better. Our entry point would need to be a close above the most current peak and the moving average that price has failed to break above previously. Skipping forward, this right here is our entry since it meets our conditions. You could put your stop loss somewhere around here. Let's skip forward to the result. This was a success. This time, we had 4 factors in our favor to buy this stock. A major support level, a bullish divergence, a close above the most recent peak, and a close above the moving average that the price previously got rejected by. This is the best strategy for utilizing RSI divergence that I know of. If you guys want to learn more or sign up for my course, feel free to visit my website, flowingtrader.com. Also, don't forget to like, comment, subscribe, and hit that notification bell so you can be notified when I release another video. Thank you so much for watching, and I will see you in the next video.